Good morning. This is Rick at Hit and Run Candlesticks. It is Friday, 11/11/2011, and we're getting ready for the market open. It's approximately 8 p.m. East Coast time. Let's start with the SPY chart. You can see that the SPY has been in this channel moving up to the 200-day moving average. It pulled back and broke that lower channel line, and that's where it's been the last 2 days. It has been holding above the October highs, September highs right here where this dotted line is. So we are above that as far as a little bit of support goes, but we do not have a buy signal as of yet to start pushing us up back up into the trend. Now it looks like the morning futures are up a little bit, but how they end up today may be a different question. So we need to watch this very closely right here. This gap down 2 days ago and then yesterday's consolidation could keep sinking a little bit. We need to see that buy signal, and we need to get back up into that trend, our trend channel. Here we have the IWM chart. You can see how IWM has been rallying just as the SPY has, all the way up to near the 200-day moving average. It put in a hangman signal right here, gap down, did a little consolidation yesterday, holding above the 34 exponential moving average. It is trading underneath the T line and below the lower channel line. We need to see caution here if you're trying to trade long. Just as the SPY, we need to see that buy signal that reverses us back up into the channel. Here we have the dollar chart. In our trading room, we quite often mention that it's all about the dollar, and we do follow the dollar chart quite closely on during the day to give us an idea of what's going on. And you can see that we came from this morning star signal here, from these lows, from this pullback. Morning star signal up. We put in a bullish flag right here, and then a big stick up 3 days ago. That kept us in the trend channel. We've had 2 days of consolidation now. It looks like we're sitting on the 50-day simple moving average right here, and we're still in that trend channel. By all rights, on a bullish chart, I would be looking for a buy signal on this and be all over it if it started moving. We need to watch this. We need to be careful. To see the market head up, we need to see this start dropping down, break through that channel line. As long as it stays in this channel, I think we should stay at a cautious, very cautious point in our trading. We're at a big tipping point right now, and keeping your eye on the dollar could help out with that. As we look at the IYT transports, or IYT chart, transports ETF, you can also see the channel that we've got here, where we've had this nice rally up, and you can see that we put this a little series of hangman in dojis, and then we had a gap down. With consolidation yesterday, we did close with a little doji yesterday near the top of the range. It can get bullish all at once, but we need to get back up in this channel to keep this trend running. So once again, be cautious here. Watch the charts. One of the leading indicators that I use for the overall market, for a kind of a bigger picture of what's going on, is copper, and I use COPX for that. And you can see that we've been trending here. Copper got real sloppy right in this area, but nevertheless it's trading up over the 20 simple, the 34 exponential, and the 50 simple, which puts us in a nice little trend from back here. You can also see how it's moved up, pulled back, gets a little sloppy, but up. And then another one of those little hangman candles in here, a gap down. And then you can see that the bearish candle, and then yesterday was a bit of a bearish Hiromi. This could be continuing to the downside. We need to see that bullish reversals come in here. We need to see those bulls step in, drive this up into this channel to keep us out of the, to move us from cautious to cautiously bullish. Right in here, as long as we're below this trend, I think if you're looking to be bullish, we need to be cautious and certainly wait for those buy signals. And for you gold bugs out there, you can see the trend we've been running. This has been a beautiful chart. Bit of a bottom right here. You can see how it ran up. We've got a little pullback. Now we have a J hook in the making here, which is a strong move up, a little pullback, and then breaking out over the previous highs. We've got another pullback here, and it looks like it pulled back right about to the lower channel line, right to the very close to the 50 simple. We could see this could be the sign of reversing from these 3 bars down. We need to see what the candlestick does today. We need to see that bullishness come in this if you're looking to trade gold long. If it starts breaking below the channel line, it's pretty much going to start breaking below these moving averages, the 20 simple, 34 exponential, and the 50 simple. At that point, you'd probably want to be a little short on GLD and wait for the next buy signal if you want to be long.